Hello and welcome. So today I'm thrilled to have Paresh Kiri with us, who is the CEO of Trader Mind. Paresh, thanks for joining us today.
Start again. I'm not the CEO. I'm the COO.
Paresh, I guess to kick things off, I guess would kind of like to hear more about yourself and your background, and I guess how you got into trading.
Sure. So, as with many things, it's trading has been fascinating for me since very early on. Not as early as Alpesh, interesting enough. So I work very closely with Alpesh Patel, who people know is prolific trader and investor in the UK for sure. But I started probably a little bit later. He started when he was 12. I started a deep interest when I was about 18, 19, because one of my friends when I went to university was, and back then, he would use teletext in the BBC teletext service to pick his stocks. And just found it extraordinary how you could make money buying and selling stocks. So one of the things I did was, when I graduated, was to apply to financial institutions. I didn't do very well in the interview process, but so it was very much a case of who you know, and I was fortunate enough to have met some interesting characters in my search for getting into the city. And this particular character got me involved in Cargill Investor Services. So very early on, I started in '93, I think it was, in Cargill Investor Services, and within on the Financial Futures Exchange, and as a trainee broker. And very quickly you learn who the main players are on the Financial Futures Exchange. And I learned very quickly that David Kite was probably the one to follow. And after about 7 or 8 months at Cargill, I could not resist but to wait around one evening like a lost sheep for him to finish trading on the floor. And I tapped him on the shoulder as he's walking out and said, I would like to learn how you trade. And he asked me to meet him on the Monday, which I did. And very quickly, within 2 weeks, I was working for him. That's how I ended up on the Financial Futures Exchange.
Wow, incredible. And I mean, what was your sort of evolvement from there, obviously, into Trading Mind? Were you sort of working in the industry for quite some time until you kind of decided to take your own path, or how did that sort of come about?
And my first day was the worst day, by the way. So I always share this story. But on the first day, I lost almost £10,000 of David Kite's money on the first day.
Oh my God!
He had just left for Israel for 2 weeks, for a 2-week break, and the other directors wanted me. They thought I was a loose cannon and wanted me off the floor. And for 2 weeks, I was biting my nails, wondering if that was the shortest career in financial markets anyone has ever had.
So, one day.
Yeah, well, it was less than 1 day, because literally within the first hour, I was down by 10 grand.
Oh my God!
So he came back and he made it very clear on how he wanted me to progress from then. And he was very stern, said, don't do that ever again, of course. And he gave me very strict rules. And I share this with everyone because he didn't tell me how much I should be making, but he was more concerned about how much I lose a day. And those rules are so simple. And that's what I follow now. He said, don't lose £1,000 in that day. If you do, just stop and watch the market till the end of the day. If you lose £1,000 the next day, then stop again, but don't trade for the rest of the week. So what you're telling me, you've got £2,000 you can lose every week, okay? And then you've still got to come in and watch the market. And what that meant was that risk management came into place. And my thing wasn't how much money I'm going to make; it was how much I'm happy to lose. Yeah. And with that in mind, it took me probably 3 or 4 months to make up the 10 grand because I was just very nervous, I guess. And as you build up your confidence, you get to feel, and this was one of the reasons he said, come and watch the market, because you imbibe a lot of its ebbs and flows. And back in the day, in 93, 94, we didn't have the technology we have now. I was on the floor. I would handwrite the high and low for the day, for instance, and what was going on a piece of card that you'd have for the day, which I would chuck the next day, ready for the next day. So it was day trading. Wouldn't have any positions overnight. And then that after, by the end of the year, I was up close to £70,000. So not a lot, but not bad for a 23-year-old in 1993. Yeah, that was the very beginnings of my journey into properly understanding how to build wealth in financial markets. Shortly after that, I was invited with David's blessing to start a stockbroking firm. So I started a stockbroking firm, which then had strategies which were used to begin a hedge fund in 1999, and which at its peak, I think 2004 was trading over 4 billion, was managing over 4 billion.
Wow.
And I met Alpesh, who I work with now very closely, in 1998 when he came to write his first book, Mind of a Trader. And he came to interview my boss, my mentor, my boss now, in 1998 for his first book, Mind of a Trader. So he interviewed David Kite on what makes him a good trader. And I experienced all of that firsthand. So since that day, I've known Alpesh, and it's what brought me to Trader Mind. So Trader Mind is an educational program. It's an educational company that delivers two things: trading aspect, where we have a thing called Pitch Predator. It's like a little algo that rests on the back of an MT4 or an MT5 platform that will assess MACD, stochastic, RSI, and various other things inbuilt. And then 90% of it's automated. It says, right, there's a buy signal, and then 10% of it's going to be you're managing the trade. Is it worth getting in? What's the support and resistance like? What's your risk profile? Can I get into this trade, basically? Then the other aspect now more, which is, the wealth, in all honesty, was built in creating the stockbroking firm and managing stocks. So I was a lot better at stock picking than I was trading the markets, because that was a good income. But the wealth really was in building a stockbroking firm and understanding you can create substantial wealth by managing a portfolio of stocks. So Trader Mind delivers this great investment program as well. And it's a very simple system. You buy a handful of stocks, could be up to 30. So between 10 and 30, say. You hold it for 12 months with a stop at 25% on entry. So you don't even care what the price is. If it meets all the metrics and some technical metrics, then you're going to get in at the price. And we don't know, out of the 10 to 30 stocks, what one is going to be the winner. If we did, we'd put all our eggs in that basket, wouldn't we? Of course, but we don't.
So kind of diversified as much as possible, effectively.
Exactly. Well, not as much as possible, but within parameters. There's actually data shows that anything greater than 40 stocks, you may as well go buy the index. And you've got to understand, 96% of fund managers actually do not even beat the index, and then you pay them for that privilege. So if you want to make a real, dent in your wealth using the stock market, you need to be a bit more focused on what you're picking for a short period of time and what you're picking for a very, very long period of time, which is what Warren Buffett does. We kind of combine the two. So if we do buy 10, 20 stocks, well, let's say you have 100 grand and you buy 10 stocks, you would put £10,000 across each of them. So it's equitably, not just diversified, but it's equitable, because we don't know which one's going to do well and which one isn't. Let's say you get stopped out of the first one, and from day one, it just kept going down, and you're out at 25% stop. So you've got 7,500 left. What do you do with that? So we teach people how to then manage that small amount of wealth now from their total, to say, okay, let's look at what Warren Buffett does. Is the market actually coming down? Do we want to start cost averaging, purchasing the buy and hold forever stocks, the things like Apple or Microsoft or whatever it might be, that's looking good for a very long time? You've got to understand that Warren Buffett currently owns, as of today, the 7th of December, close to, just over 50% of his portfolio is in Apple. So these people are a lot cleverer than I am. So why wouldn't I listen to what they're doing and possibly, say, right, for my long-term portfolio, I'll do a bit of that as well.
I'm curious to know, there's always been that kind of like that a debate between automatic strategies and manual strategies. And as I understand it, obviously you've been putting a lot more focused on sort of automated strategies. What do you think would be the sort of pros and cons of each sort of approaches? There's always that camp that says, look, you take all of the emotions out of it and you can completely sort of automate your strategies and, trade on an algorithmic basis. But then there's people that say, look, you have to have a manual element of it as well, because algos don't obviously detect everything. What's kind of your take on that?
Well, yes, and you touched upon probably the most important part of anyone who wishes to enter this sort of industry, and that's the psychology of trading. The emotions are the key thing. In fact, I did a talk at the IX Investor Show 2-3 weeks ago, and they asked me what I want to talk about, and there was a number of speakers who would be talking about the systems and how they use those systems to make money in the stock market or the FX market or whatever it might be. But ultimately, and I said I would like to speak about the psychology of trading. And there's camp for both, and if this is evidence, if I came across this article, the Forbes 2023 article on the top 10 fund managers of all time. The top 2 fund managers were Tim Griffin and Jim Simons. Tim Griffin of Citadel, and Jim Simons of, I think, of Renaissance. And the third one was
Renaissance Capital, right? Renaissance,
yeah. Right? Yeah. And the third one was Ray Dalio, Bridgewater. The first one, all research based, fundamentals only. He would buy up research teams from Exxon to research hundreds of companies to come up with that strategy, which took out all the emotion. So if it hits certain parameters, then you're happy to invest in that business. The second one, Jim Simons, who just used quants. He would hire extremely intelligent mathematicians for quantitative quant-based algorithmic strategies, and that's all he did. And so he understands that the stock will have its own trend, and if it goes far away from it, it'll eventually come back. And he has some extremely intelligent people doing that. Again, takes out all the emotion. Ray Dalio didn't use either of those. He explains, and he said this on the TikTok video, and I've played videos of all 3 of them explaining this, that I use meditation to manage my emotions.
Oh, wow.
So the emotional aspect is the key thing. It's not that one's better than the other. It's how you manage your emotions. So you may be predominantly quant-based because that helps you to forget and just trust the system. Yeah. Those who create the system and don't trust themselves can't do that. It's because their emotions get in the way. So you're absolutely right. The psychology of trading is a very key element to one's success. So even if you had a system which gave you 50-50 as you would with a flick of a coin, so you might buy or sell this 50 chance over many trades. If you can't manage the trade, then you'll probably lose money. If you can't manage your risk, saying I'm going to only get out when it hits this level, and I'm going to trail my stop down with set parameters, you will lose money.
You will, exactly. It's funny you mentioned that, because I have a lot of personal sort of experiences of that. Back in the day when we were kind of running an asset management firm, and we're sort of hiring traders to take care of various sort of portfolios and stuff like that. And it was interesting because we would obviously look at their track records, crunch their numbers, et cetera, et cetera. But it was always interesting that a lot of the traders that were not really in control of their emotions, and a lot of people that I guess had a bit of an ego, I think, always ended up losing money. And I could tell you so many examples of the people that had a very big ego because they always thought that they could outsmart the market, right? Because they thought that they were always right. And that's where obviously the psychology came in, right? Whereas the people that were much more cool-headed, didn't really have an ego, and had their sort of emotions in check, they always perform by the end of the year. So I mean, there's just so much truth to that, to really sort of control your emotions and kind of be cool-headed when it comes to the markets.
Yeah, 100%. And I think people don't fully appreciate that this particular industry is how you get to understand your true self. And sometimes you don't like what's looking back at you in the mirror, because like you mentioned, you see if you're able to see your own ego, and you understand it's not the market's fault particularly, but whatever you're doing is, whether it's second guessing your own system or whatever it might be, it's not working because of the emotional attachments you have to a particular position or whatever it could be. But yeah, That is the key thing for sure.
Mm-hmm. Exactly. I'm wondering, touching on the base of the subject of meditation, I guess one sort of, I guess, new trend that has sort of been evolving within the trading community that I've heard. Obviously, it's not hasn't been really deployed a lot, but some people have actually sort of used psychedelics as well in some form of microdosing to be able to sort of recognize patterns in the market. Is that something that you're familiar with, and do you think that has some benefit to trading overall?
Well, that's an interesting concept, and we could go off piste here, and I could show you the meditation I do. Let me pull out a document, and whether you add this entirely up to you, but it's microdosing and all that. What you got to understand is, to answer your question, I get, because I can't talk about something I've not experienced, but I have heard about those, but I can't say. I can only assume it's associated to what I'm about to say to you now. Yeah.
Right. Mm-hmm.
So this is the meditation I do. It's called Sahaj Yoga, and it's based on the premise that inside your body there's this solar system. Yeah. And it's made up of a left channel,
Mm-hmm.
a right channel, and a central channel.
Mm.
And these 7 base chakras. So in Sanskrit, chakra means wheel. So these wheels have a resonance, and depending on the makeup, like there's 4 petals, 6 petals, 10, 12, 16, 2, and then 1,000 at the top. It'll have a certain degree of what frequency that's turning at, and because it's a wheel, it generally goes around in a clockwise direction, positive energy. And in Chinese theology, this is the moon channel, this is the sun channel, and the left side is everything to do with your. So this is what I mean. The left side is everything to do with your desires, your emotions, and how you're connected to your female relationships. The right side is everything to do with actions. So you'll have a desire coming up from the left-hand side, and then you'll have your right side energy to execute that desire, whatever that might be. And often they cross here, so your desires and your actions are at loggerheads typically. And this is where psychedelics or whatever you're saying, you need a system to bring these 2 institutions down, so your thoughts don't get in the way of your performance.
Right.
The past or the future. Yeah.
Exactly. Yeah. Mm-hmm.
So in this particular meditation, we raise this energy. She's a mothering energy called Kundalini. She rises through the central channel, so not the past or the future, but the present moment. And you'll hear of sportsmen particularly saying, "I'm in the zone." Traders talk about it all the time as well. And this is what they're talking about. They're being in the zone. So they don't allow their emotions or their ego get in the way of what is actually happening. And they'll witness the whole thing from a distance. Yeah? So just to show you what I mean about how profound this can be. So this was taught in 1970, by the way. So it's not something I'm going to make up, but
Exactly. Yeah.
and I'm going to share it now. And I don't know if you want to share it because it's not necessarily relevant to trading, but it's relevant to the world we live in currently.
Absolutely.
So if you imagine,
Absolutely.
thank you. So if you imagine,
I mean, it's all interconnected, right? At the end of the day, like whatever actions we do, whether it's in our daily lives or trading, it's all influenced by our inner thoughts. At the end of the day, every decision is it comes from inside, and if you have a cool and calm head inside, and you're able to obviously nurture these chakras, then I think that will ultimately reflect on the charts as well, and ultimately your account balance.
100%. And you hit the nail on the head. It's those thoughts. So a thought will take you down a road, and then where that road ends, you're not to know. So sometimes very dark thoughts, and sometimes very pleasant ones. So
exactly,
if you can't manage those thoughts, which go left or right, then you're going to be struggling to be a true performer within any trading.
Right. Exactly.
Let me share one thing about this though. So if you imagine that if you're super right-sided, somebody who's planning all the time, then that creates a balloon here called the ego that pushes down on this side. This will push back typically, and that's that tells you your body is telling you should take a break or take a rest. In extreme circumstances where this is overactive, it tries to bear down too much on this. That pushes back with a vengeance, and that'll take out the whole right side, and that's what creates a stroke or a heart attack, for instance.
Wow. Okay.
So it's all connected, and these chakras are connected to various organs. So any illnesses, etc., are a permutation and combination of a breakdown of those particular petals, for instance. So cancers, illnesses, all come from this solar system. But if you conform to, this is where it gets really interesting. If you conform to the idea of the Big Bang Theory, and we are a microcosm of the macrocosm, then this system is also how the world is structured. So what I'm going to show you next was shown in 1970. It's not something I made up. Yeah, but I'm going to show you how profound it is. Okay. And this is the geography of the geography of those chakras and systems, right? So, and these are the countries, right?
Yeah.
And I don't know if you can see this, but if you imagine over the last 250 years, yeah, we as a species have been super right-sided, which creates a balloon here. Yeah. So you could argue that COVID was nothing other than this side pushing back, because where did COVID start? China, right?
Yeah.
And what's happened since China is this side, which is Russia. Yeah. Now, what's more interesting, is there's China and Russia in macrocosm, right? There's this center connects them both, and that center, I don't know if you can see that, is Palestine.
Oh wow! Oh wow!
So it is all connected. You
Yeah.
do need to be aware of this thing, in my opinion, to succeed. And yeah, it's a different ball game altogether when you look at this. Okay? I thought I'd share that.
People think that trading is just about, learning, RSIs and MACDs and, like Bollinger Bands and stuff like that. But they don't realize that there's such a big universe out there, that really ultimately, if you have a clean mind and you don't have a cluttered mind here, then ultimately that is going to show up in the charts as well. So it's just not about, crunching numbers and, having the best track record and having the best strategy. It's about having a cool and sound mind in your head as well.
Because most people, and I'll go back to the beginning here, most people will approach trading and saying, right, I need to make, £1,000 a month trading because that's a nice little income. Instead of thinking, I'm happy to lose £1,000 a day, like David Kiri. See the difference. Your target is not how much I'm making. That happens as a consequence of being the risk manager.
Exactly. Which is what they always, focus. Like what any big institutional firm that they would employ you on, it's not really about the profits that you can make. It's always about the risk management. How much are you willing to lose? What is your stop loss? What percentage of this trade are you willing to bet? In case it goes south, in case it doesn't work. And I think that's really the approach and the angle that you always have to look at your trading, and not how many pips can I potentially make on this, 200, 500, 1,000, whatever it may be. I wanted to ask you, obviously your book revolves a lot about spread betting as well. Obviously, as we know, derivative trading involves a lot of risks. What do you believe, I guess, is the critical factors that traders should consider when they're trading spread betting? And how do you think, I guess traders can effectively manage the volatility associated with trading?
Yeah, as with all these things, particularly, I mean, in the UK, you're allowed to spread bet. So the advantage is if you make money, you don't need to pay tax on it. But equally, it's a leveraged product, and you've got to understand what leverage means. Yeah, and the margin calls you could be assigned to if you don't have a proper risk management process in place. Yeah. So with all these things, which is what we teach our mentees, have a demo account. Until you start making money on a demo account, and you can take that seriously enough, that demo account, because it's a demo, a lot of people don't take it seriously enough, and they don't put in the time and effort, and they don't realize, Malcolm Gladwell wrote a great book called Outliers. In that book, he explained you need to spend 10,000 hours to become an expert. Imagine what on the days I did lose £1,000, I would sit there and watch the market. I did that for many years. So my 10,000 hours, I've earned that station to be called an expert, so-called. But it's not that I feel I'm an expert. It's just that I've just got that experience, of putting the hours in and understanding what this means. So I wouldn't recommend anyone just goes head on to betting. I think everything you do needs to be tested.
It's that cliche. I mean, before you can walk, you have to crawl, right? And before you can run, you have to walk, et cetera, et cetera. So I guess everything has to be in increments and stages in life.
Well, Well, and that's a very good cliche as well, because it's by falling over enough times, knowing that you can get up and brush yourself off enough
Yeah.
time gives you that confidence. Say, well, so yeah, and you don't want to be, one of the things I always say to people is, I want to come back and play this game tomorrow. So I'm
Yes.
only going to be risking a set amount today, and I'll stop if I hit that amount, and then I'll come back tomorrow. Yeah.
Correct. Exactly. You have to be able to come back and live and trade another day effectively. You've probably seen like a lot of different, various market conditions from, the 90s, obviously, then we had the, big financial crisis, and,
Yeah.
then we had loose monetary policies, and then obviously COVID came. I guess, what lessons have you learned about sort of adapting your strategies into different market climates and dynamics? Because every market climate dynamic is always different, right? So I guess, what is the sort of key takeaway that you've always taken when, market dynamics and market climates is always shifted? And how do you sort of prepare for those climates when they're actually pivoting, and obviously those market fluctuations?
Yeah, well, that's a fantastic question, because again, it comes back down to your emotions a little bit. And what I definitely had to learn during this period is what everyone else does, is to is not to be fixated on just a position. So the fact that I can go long or short in the market is a tremendous advantage, but I'm not wedded to. So if I am long, for instance, I'm happy to change my tack. So you almost try and ebb and flow with whatever the market's doing. So these changes, or these situations like the dot-com bubble, the financial crisis in 2008, or what we experienced in COVID, knowing that when it's too much and it's time to possibly buy, it's time to turn the corner, which is what we did in 2020, basically. Yeah. And Alpesh particularly, he's exceptional at an oracle, I guess. Just exceptional in defining those moments on turnarounds, particularly. And we can evidence that with his mentees and what he says on his very prolific social media about when to buy, when to sell, what's happening, when to slow down. But where we had people in the Great Investment Program, and this particular year, for instance, from about July, August, he was saying it's probably time to hold back, stand back a little bit, and not get so involved. It might be time to take profits from anyone who got in January. And so those who follow him, literally, and I've had calls with people who just follow him, and they make money, and they don't pay for any of the programs. And this is an aspiration that, financial literacy in this particular area is so lacking. It needs, somebody needs to sort of take it that much further. So that if there's trillions involved, it's an industry that everyone should be involved in, not just the big boys. And those who are, aren't able to get involved excessively, or they don't have the means to, need to have the tools and the education to understand how they can increase their wealth, how they can progress, and not make the mistakes that we've all made in the past. So they learn from the experts. I learned from Warren Buffett and all the others, because they are just better than us. I'm not, they are cleverer. So I would rather listen to those who already made mistakes. And that again comes down to your ego as well. So you don't mind taking advice from those who are better. Yeah.
Exactly. What would you say is the biggest difference trading in this environment in 2023 versus, let's say, when you started out in the early 90s, or even early 2000s? Like, what is the sort of biggest difference, or the challenges, if you will, in today's market climates?
It's the speed. It's the speed at which everything happens. This AI is, it's fundamentally is going to change the way people trade. I'm certain of it. Yeah. And I think people don't and some people probably don't, but some people do understand the impact this will have on every single industry. So it's, where in the early days, where you didn't have all the technology and all the media cover and all the rest of it, so it's quite steady. But you look at, since the dot-com bubble and the internet and everything, the speed at which things change, the speed at which certain stocks or products or whatever hit certain milestones, is tremendous, and they can come off just as quickly as well. The flavor of the month changes so fast, and it's something I struggle to keep up with. So you've got to almost an evolution for me is to understand that that's happening, and is there still a niche where I can do what I'm used to doing and still make a living? It's not easy
Right.
because of how quick things change in this market.
So would you say this market climate is significantly more difficult to generate money in that case, or was it kind of easier back in the day?
There was no, I don't think it's easier or harder. I just think it's changed. Yeah, it's evolved. So you've got to evolve as a person. And when people talk about burnout or easy or hard, it just means we haven't evolved into that new changed environment. That's all it is. It again comes down to our own emotions and our own ability to understand what's going on with the environment. Yeah. But
Exactly.
yeah, for me,
If you look at, come
sorry.
again?
Yeah, for me, I would say it is harder because I'm older now, and so and you get used to the way of doing things.
Yeah, I mean, even if we look at the daily ranges that you get these days are much shorter than they were in let's say the 90s or even early 2000s. Obviously back in the day you had those long beautiful 1 to 2,000 pip moves up and down, and in these days, I mean, you're happy if you get like 40-50 pip daily range until the market sort of turns, right? So it's just more short term, like you said, it's much more fast paced. I think in this market climate as opposed to only a couple of years ago.
But that's not a bad thing. That shows actually the efficiency of the market. Where people you can't manipulate the market so much. And there are orders on both on the bid and offer to create extremes.
Exactly. So how do you, I guess, approach, cope with like, losses in trading now? Obviously, you mentioned that there was a loss that you had, when you started out, but are there any other sort of big losses that you have really learned from during your career, and what are the sort of I guess risk mitigations that you put in to never sort of repeat those mistakes again, if you will?
Yeah. So no, that was my biggest and only mistake. I'm pleased to say.
Okay.
But
you learned your lesson well then, eh?
yeah, well, this is half the battle, to learn from those lessons, I guess. But certainly, what I have learned to do is if I feel I'm on a losing streak, so I have lost £1,000 2 days in a row, what David Kite taught me, I will just stop. Yeah, I won't necessarily watch the market, but I'll come back in a week. Okay? I get on. So I don't let things get on top of me like I used to, or would have done when I was younger.
Yeah, I guess the biggest sort of mistake a lot of especially new traders always do is that they start over trading, and they don't really know when to stop. And once they do a couple of losses, then they get back into the market. They start revenge trading, and then they just dig a deeper hole all the time. So I think one way of really being profitable in the market as well is just to kind of wait and stick on the sidelines until you actually get a type A setup or a very, very good trading setup,
Yeah. 100%. Grade A setups is what we look for, what I look for. And if they don't come, you don't trade. When I'm in that position where I've lost 2 times, so I will make sure my next trade, when I do come back, is an A grade trade. It forces you back into that good practice, best practice that you're supposed to meet. And you're absolutely right. Revenge trading is interesting. I never heard that before, but people do that. They want to say, I've just lost X amount, so I'm going to have to make it back on this trade. Again, they're looking at how much they want to make instead of saying, how much am I happy to lose on this trade, and forget about what's actually happened.
Once you obviously get punched a couple of times in the market and slapped around, that's when you kind of sober up and say, okay, right. I mean, it's like that, quote from Mike Tyson, like he said, everybody has a plan until they get punched in the face,
Yeah.
Switching gears a little bit, Paresh, you've obviously played a role at MC at House of Lords at an event that highlighted kind of the importance of women in trading. What is, I guess, so your opinion on this topic, and how do you view the lack of women in trading spaces? Do you think that this is something that will increase in the future, or is this something that we could kind of encourage more women to come into trading, or what's your sort of view on that?
Well, my view is that, women are wonderful stabilizers. And they have this extraordinary ability to stabilize most situations because of their temperament, and they tend to be better traders. Yeah. What has, I guess, occurred is they don't realize this because of the way the industry has grown up or evolved over time. And Albush wrote a book on, or an article, I think, for the FT on evidencing women tend to be better traders in any case.
Oh, wow.
So there is data showing that they are better traders. Yeah, they just don't know it. Yeah.
Is that because they would generally sort of, if you were to generalize, more risk averse as traders? So, they don't obviously take as much risk as men generally, or?
Well, yeah, it's not so much that they already have it in their mind. Men tend to be, they shoot from the hip sometimes, and they have this ego saying, right, I'm going to make this, or I'm going to do this. So it's all about action, like I said in the chart. Yeah, it's all about doing things, and quite rightly, because that's what a man does ultimately. But what women do, they'll think, right, what am I happy to lose? Again, it goes back to what are you really happy to lose. So their temperament is in the right place to be a successful trader in the first place, because they are just, they are hardwired like that, I guess.
Right.
Don't realize it. But,
Yeah. I mean, it's interesting if you look at Japan. A lot of the housewives in Japan are actually forex traders.
and China.
So and they're actually pretty good at it as well. So
yeah.
I guess in today's climate, in moving, we're obviously turning the page, 2023, 2024. Do you believe there's any sort of assets or sectors that are particularly promising as we sort of go into the new year, or I guess risky? We see Bitcoin obviously hitting 44K, just a couple of days ago, and there seems to be a bit of a bull run there. What are your sort of thoughts right now in the market, as we go into the new year?
Yeah, I think going forward, definitely for the next 12 months, you want to be doing more of the same. But certainly there are some aspects like Bitcoin or whatever you want to, whatever the flavor of the month is, you probably want to, it's about asset allocation. So if you had a portfolio and you had the ability to get involved in items which would call as FOMO, the fear of missing out, which some people have with Bitcoin or whatever it might be, then put a little bit in that and just forget about it. So there's risk capital, which is proper risk capital, and you should just literally ignore it for the next 5 years. One thing, most assuredly for the next 12 months, I think people should get involved with the Great Investment Program and come on board and say, right, we are going to pick a handful of stocks because they meet certain metrics. Because it's the best way to manage your emotions. If you know if this is what it is and you're going to risk 25%, which is what we teach, then I don't, and Alpesh and I will be speaking probably in the next week or so before the new year begins on what sectors look sexy or not so. But I haven't got an opinion right this moment to answer that question fully.
Okay, so you don't have a certain sort of opinion on which sectors or industries look particularly promising?
No, being a trader, I don't particularly look too far ahead into the future. I will look in January, but towards the end of December, beginning of January, what I want to get involved in for the next 12 months in the stock portfolio, basically. But apart from that, I won't look beyond 12 months.
I mean, one obviously big candidate that's coming up, obviously gold. We saw gold hit new highs, at the backdrop of obviously the war in Israel and Palestine, and potentially them not cutting any rates now moving forward. What are your sort of thoughts on gold moving forward? I think it did a big dive now, last week. Do you think that might sort of be a good buying opportunity until it sort of makes new highs?
Yeah, 100%. I think one of the things with gold particularly is it's one of those stable things that you want to, bit like Warren Buffett's, buy and hold forever strategies. Gold is one thing that if it ever comes off, you want to buy more of. It was the one thing that pegged the majority of the currencies in the world. It has a value which, it's probably next to none in all honesty. But that's me being an Indian, I guess. We do tend to buy a lot of gold.
Absolutely, for the weddings and everything,
Exactly.
right? Yeah,
Indeed.
right. So gold and obviously, silver is probably a
So buy the dips, and just keep doing that. You can't.
And would you recommend people to sort of trade on a contract basis, or is it better to kind of keep physical gold, I guess, in your basement? Like, what's your sort of?
Well, jewelry is always a good place to buy in the formal, but I guess, but I trade the contract, of course.
Mm,
If you've got deep enough pockets, it'd be good to hold those for sure and buy a
mm,
warehouse. Yeah, no, for trading purposes, buy the contract and buy the dips, but probably take a good 6 months to a year view on it in most
mm.
cases, because it does. There are moments where gold will just do nothing. Yeah, it's one of
Mm.
those that does nothing. But yeah.
My last question here, before we wrap up, is obviously, you're a seasoned trader. You've been in and around in the markets for many, many years. I guess what would be the best advice that you could give to, as a new traders, individuals, especially those new to trading and sort of, working on the risk management and stuff like that, to really maintain a resilient mindset when they're sort of, working on their personal strategies?
Yeah, if you're not a quant, a mathematician, like Jim Simons or Tim Griffin, then use meditation definitely to manage your thoughts.
Yeah.
And then when you
Wow.
do start out in this industry, try pick a product that's reasonably liquid so you can get in and out. Yeah, so you're not
Okay.
stuck with something that you can't get out of. And try and become an expert, and that means putting the hours in. And just watch it sometimes. Just like David Kite said, just watch the market. You don't know what that does to you. Internally, you're just imbibing so much information that
Mm-hmm.
you don't recognize fully until much, much later. Yeah.
Mm-hmm.
And it's in the words of Steve Jobs, you connect the dots much, much later on why you have something, why the successes happen. For sure.
Mm-hmm.
But don't give up. It's a extremely lucrative area if you can manage your thoughts and manage your risk. Two main things comes as a consequence.
Mm-hmm. Exactly. And obviously your firm, does a lot of mentoring and education and stuff like that. So I'm sure a lot of traders would be able to benefit about, a lot of your content and material as well.
Yeah, they would, look up Campaign for a Million, the great investment program, Alpha
Mm-hmm.
Hotel or Pips Predator, the main links.
Mm-hmm. Amazing. Yeah, we'll put up all the links, obviously, for any traders that would be interested. You guys have obviously a wealth of experience, and I think a lot of traders, especially new to the market, would probably greatly benefit from your experience. Especially, given the losses, obviously, that you're telling me in the in the
Yeah,
90s.
yeah. I don't think our pitchers have had those sort of losses. It was just me on the floor, but I think
Right.
everyone on the floor would have had a loss, if not greater, at least.
Right. I think one of the best traders that I know have always had, big losses initially when they started, and that's how they kind of learned. I mean, there's no greater way of education than actually falling down. Because you know how much it hurts. You're
Yeah,
riding a bicycle, for an example, and then when you fall down, you actually know how it hurts, and that's
yeah,
when you start sort of implementing changes in your strategy and focusing more on obviously risk mitigation
yeah.
and risk management.
Yeah, that's actually reminding me of something else David Kite told me on the first day. He goes, well, if you lost 10 grand in a day, you can make 10 grand in a day. That doesn't give everyone the right to go out and lose 10 grand because it's hard work. But if
Yeah.
you can definitely uh, understand, uh, hypothetically what he's saying there, your ability to lose that much means you have the skill to actually make that much as well.
Mm-hmm. Exactly. Absolutely. And it takes years of experience, right? There's no short-term cuts for, becoming a good trader. I mean,
No,
there's no shortcuts and no shortcuts in life, in any case. You just have to do the job, put in the hours, learn,
yeah,
and obviously have good mentors that have done the mistakes as well, and then sort of incorporate that as much as. And I think you put a great had a great insight into really the meditation part of it as well, and keeping your body calm and cool and not cluttered. And I think that's really a great advice that a lot of traders can sort of implement in their daily trading.
100%. Yeah, for sure.
Yeah. Paresh, it's been a fascinating conversation. Thank you so much for participating, and I'd love to do a follow-up someday as well.
Sure.
Really, really fascinating.
Delighted.